Hi everybody, welcome to the online edition of Managerial Cost Accounting. My name is Travis Martin. I'll be your instructor over the course of the next 16 weeks. And what we're going to try to do is we're going to try to break up the chapters into a few small video lectures, maybe 2 or 3 per chapter, just to give people a little extra help. Sometimes in an online course, especially accounting, you feel like you're on your own and having to walk through everything by yourself. So hopefully we can give you guys a little something that we can latch on to make the class a little bit easier. So let's go ahead and start at chapter 1. Logical place to start, right? What we want to try to accomplish in our first lecture here is we want to give you an idea of how principles of accounting, financial accounting, a class you've already taken, is going to be different from managerial and cost accounting, which you're going to be taking now. To kind of do that, we'll compare and contrast the two, and we'll talk about the information that's created in both of those two kind of categories. We'll talk about the rules that are followed. We'll talk about the nature of the information that we'll be generating, and then also who's going to use all the info that's generated. Okay, not to make you relive what may have been a bad memory for you, but we need to spend a little bit of time talking about what happened in our Principles of Accounting class. Now, you probably recall spending a lot of time in there analyzing transactions and making journal entries. And all that work kind of culminated at the end of the accounting period into what we call financial statements. And hopefully you recall there are 3 main kind of financial statements that we made in our Principles of Accounting class, or financial accounting, that we kind of had. The first one was the balance sheet. We learned how to put that together. We also talked about the income statement, and if you got far enough along, you learned a little bit about the cash flow statement. But together, those 3 statements give us a picture of where the business is at from a financial standpoint. So if you're not familiar with those, let's take a second to kind of check those out. Here we have a set of financial statements from John Deere. John Deere is a manufacturing company that makes farm equipment. They make lawn mowing equipment and heavy machinery. We'll start with the income statement. You'll notice that it is a statement of consolidated income, which means they have multiple business entities that they've kind of combined into one financial statement. So as with any income statement, we're going to begin with the amount that we sold. So they have a net sales number. They have an interest income number. John Deere has a credit arm that kind of gives financing to customers, so they've got some interest going on there. And then they have a total income number. You deduct from that your expenses. So they have cost of sales. Most of the time for a manufacturer, or a retailer for that matter, that's going to be your biggest number as far as an expense goes on the income statement. Then they have their other expenses on there. And the whole point behind an income statement is to get to a number called net income. That net income number is going to tell us how much money we made or lost during the year. So in John Deere's case, they had net income of a little more than $3 billion. The second big financial statement that we looked at in Principles of Accounting would have been our balance sheet. And if you remember, the balance sheet is a representation of the accounting equation. Assets equal liabilities plus equity. Okay, so if we look at John Deere, they have assets of just over $59 billion. And as we move down, we can see that their liabilities and equity do in fact equal their total assets. So that's a pretty important financial statement. The third financial statement was a statement of cash flows, and the whole point behind that is to follow dollars in and out of the company and to show how much our cash balance went up or down during the year. So combined, those 3 guys make up our financial statements: our income statement, balance sheet, and cash flow statement. And that's kind of the whole point behind financial accounting, is getting that information to the public. Now that we've covered our financial statement, we need to talk about what rules we followed to make those. And we're not going to say a lot about that, but you should recall from Principles of Accounting there's a set of guidelines that we followed called Generally Accepted Accounting Principles, or GAAP. And GAAP is created for the most part by an organization called the FASB, the Financial Accounting Standards Board. And they tell us kind of what we need to do to keep our books in line. And everything you kind of learned in Principles of Accounting was geared towards following generally accepted accounting principles. So we have our financial statements that we prepared according to GAAP. The nature of the information in those financial statements is going to be historic. Everything, well, most everything that we report in our income statement and in our balance sheet is going to be based on events that have already happened. Historical. We're looking backwards. As far as who might be interested in that kind of information, we're not really going to be interested in it from a projection standpoint. Past performance doesn't always guarantee that those things are going to happen again. But from a historical standpoint, people that want that information, they could mostly include external parties to the company. So what I mean by that is a bank would probably be interested in looking at a balance sheet before they extend a loan to a company. They want to know, is that company going to be able to pay that money back? A potential shareholder would probably want to know, is that company profitable? I do not want to invest in a company that's not going to make money and not making money. And finally, the government may be interested in the amount of sales the company has so they can determine a tax liability. So your financial statements are going to be historical in nature, and for the most part, they're going to be used by people that are going to be external to the company. So you've lived through principles of accounting and financial accounting, and you're probably thinking to yourself, what will we be doing different here? Why do I need a separate class? I already know all the accounting I need to know. Well, managerial and cost accounting are kind of like different dialects of the accounting language, if you will. So let's take that same idea that we were looking at before. What information are we creating? What rules do we follow? What is the nature of the information and who's going to use it? And kind of apply it to managerial and cost accounting. And then hopefully you'll see how it's different from your financial accounting class. So we'll start with what information are we creating in managerial accounting? Well, it's kind of like the name implies. It's managerial information. So with that being the case, we're going to be looking at information that is both financial and non-financial. So you're thinking, well, what do you mean non-financial? There's a lot of things that are in managerial accounting that don't necessarily have to go along with GAAP-created financial statements. So we'll be looking at those as we go along. The rules that we follow in managerial accounting are a little bit different too. We don't necessarily follow GAAP. There's no GAAP for managerial accounting. In fact, there's really not a governing body. There's no standard setting body that says this is how managerial accounting has to be done. There are organizations that have suggested guidelines, but there's no kind of legal pressure to follow those guidelines. So the information we're looking at, there's going to be financial, but there's also going to be some non-financial information that we look at. And there's not really a set kind of a bucket of rules that we follow. They're more kind of guidelines that are suggested. In financial accounting, the nature of everything we do is historic. In managerial accounting, we also have that historic component, but we also have a future focus. So the nature of the info that we're looking at in managerial is going to kind of be twofold. It's going to be historic, but we're also going to have a component that kind of looks ahead also from kind of a planning standpoint. So to give you an example of that, let's say that I am a manufacturer and I want to know what my cash balance might look like throughout the year that's coming up. I could actually have a forecasted cash balance that goes along from month to month. So in that regard, managerial accounting kind of can have a future focus. There's no requirement in GAAP that says I have to prepare a forecasted cash flow for a year. But in managerial accounting, that's something I might want to do. So another difference between principles of accounting and managerial accounting, here we're also going to have a different kind of user of the information. Managerial accounting is going to be used strictly by people that are internal to the company. It's going to be used by managers. It's going to be used by people who do the planning within the company. There's no requirement that I release my forecasted cash flow or cash balances for the year. So everything that's going to kind of be generated from a managerial accounting standpoint is going to be used by people that are inside the company. And there's no requirement that they share that with people that are external to the company, like a financial statement. So now hopefully you have a little bit of an idea of financial accounting and how managerial accounting is going to be different. The class is titled Managerial Cost Accounting. So the third kind of component in the equation here, the cost accounting part, you can think of that as fitting right in between financial accounting and managerial accounting, meaning it has characteristics of both of those areas. The information that we're most concerned about in cost accounting is trying to come up with a number for our product cost. If we're a manufacturer, what does it cost us to create that product and get it to the consumer? If we are a service business, meaning we don't have a tangible product, but we are providing some kind of a service like a law firm or an accounting firm, what does it cost us to deliver that service? So cost accounting is very much concerned with compiling the data to assign a cost to a product. Now, obviously, that's pretty important. If we're going to be a profitable firm, we have to sell our product or our service at a cost that is higher than what we have in it. So coming up with that number is pretty important. As far as the rules that we're going to follow, since it is going to be a number reported on our financial statement, we do have to follow GAAP to come up with product cost in some cases, if we're going to be reporting it externally. If it's going to be an internally used document, then we can follow industry standards, if it's just something we're using for our own planning purposes. So the rules we follow: GAAP for externally reported numbers, industry standards for internally used numbers. The final 2 points we'll make in regards to cost accounting regarding the nature of the information. For the most part, it's going to be historical. The other kind of thing you can look at with cost accounting is it's going to be quantifiable, meaning we try to quantify the cost that we're incurring to attach them to the product or the service that we're delivering. Who's going to use that information? Well, like I said, cost accounting kind of lives in that middle area between financial accounting and managerial accounting. So the people that are going to use that information could include both internal and external parties. So as you can see, the cost accounting realm kind of includes a little bit of managerial and a little bit of financial accounting. And that's really kind of what we'll be focusing on. We'll be focusing on the cost accounting and the managerial accounting in our class and our time together. Now, hopefully that gives you a little bit of an overview. If you have any questions, I definitely encourage you to read through Chapter 1 and the introduction in that chapter. And also, if you have any questions, I'll give you my contact information here at the end, and you can definitely get with me, and I'd be happy to take care of those for you. Here's my email. You can email me anytime. I'm also on Blackboard IM, and I believe I've passed out my phone number in the syllabi, so you can feel free to contact me that way too. Thanks for your attention and your time, and I look forward to covering more with you as we go along.